Hey everyone, welcome back to Corporate Decoder. Today, Tianci International Incorporated just filed an 8K, and I am seeing a partnership that could go either way. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is talking about new opportunities in gold and chromium, but remember this is based on a non-binding agreement. So what is this filing all about? Well, Tianci International Incorporated, ticker symbol, CIT, is reporting on some new developments regarding joint operations with another company called Greypole Mineral Resources. This is an 8K filing, which typically means important and usually unexpected corporate events. The main point here is that on the 26th of June 2026, the company announced progress on developing joint operations. These operations are aimed at the markets for gold and chromium. This is happening because of a non-binding Memorandum of Understanding, or MO, that they signed back on the 14th of April 2026. A non-binding MOU means that while both sides are serious about exploring this partnership, neither is legally obligated to go through with it yet. They are still in the discussion and planning phase. Now, this form has a few checkboxes that companies tick to indicate if this filing is also meant to cover other types of communications. You can see here they are not using this filing to simultaneously cover things like written communications related to securities offerings, or materials for soliciting votes, or pre-commencement communications for tender offers. This filing is purely about the event it is reporting. They also indicate whether they are an emerging growth company. This is a classification for companies that have total annual gross revenues of less than $1 billion during their most recently completed fiscal year. Emerging growth companies can take advantage of certain accommodations under the Jobs Act, which aims to reduce regulatory burdens for smaller businesses. T.I.A.N.C.I International Incorporated is not checking this box, meaning they are likely not considered an emerging growth company or have chosen not to use any extended transition periods for accounting standards. This section, item 8.01, is where companies report other events that are significant enough to warrant immediate disclosure to shareholders and the public. This is exactly what Tianci International Incorporated is doing by announcing the progress on its joint operations with Greypole Mineral Resources. The press release itself is being furnished as part of this filing, which gives us more details about the announcement. Under item 9.01, companies list the financial statements and exhibits that are part of the filing. In this case, the most important exhibit is Exhibit 99.1, which is the actual press release dated the 26th of June 2026. This is where the full announcement is detailed. The other exhibit, 104, is the cover page interactive data file, which is standard for making the filing machine readable for analysis. Looking at the broader context, Tianci International is a company in the industrial sector, specifically in integrated freight and logistics. Its market capitalization is quite small, around $7 million, with the current stock price sitting at $0.72. Recent news has shown some activity, including the company raising nearly $4.9 million from selling units and warrants in late June 2026. This suggests they are looking for capital. They also had a stock jump in mid-June, which is common in volatile small-cap stocks. Now, let's consider what this partnership means. Gold and chromium are valuable commodities. Developing joint operations in these markets could potentially diversify Tianci International's business beyond just logistics. However, the fact that the MOU is non-binding is a critical point. Many non-binding agreements are announced to generate excitement, but they don't always translate into a finalized deal. Historically, companies that explore new commodity markets, especially those that require significant upfront investment like mining or resource extraction, face considerable risks. These can include volatile commodity prices, regulatory hurdles, and the need for substantial capital. We have seen many companies try to pivot into new industries with mixed success. For example, companies that announce commodity plays without a solid financial footing and execution plan often struggle. What I am actually looking for is concrete evidence of how this partnership will be funded, and what specific milestones they need to hit to move from a non-binding MOU to a firm commitment. Without that, this announcement is primarily a statement of intent rather than a guaranteed business expansion. The risk here is that the company diverts resources or attention towards this uncertain venture, potentially impacting its core logistics business. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like, subscribe, and join our Discord in the description.